Good morning, everyone. This is Tammy Costrini from Insurance Advisors Direct. And today we have Jay Walton from PeopleKeep, who is going to talk to us about health reimbursement accounts and ICHRA. So without further ado, Jay, go ahead and if you wouldn't mind introducing yourself and PeopleKeep.
Yeah, absolutely. Thank you. My name is Jay Walton. I am the partner manager at PeopleKeep. And really what I do is I work with brokers, CPAs, any individual market reps, franchises, really anybody that could has clients that would have an interest in an HRA. And what my role is to nurture and expand the partners, connect you with different businesses, partners, employers that are in your area. Really anything I can do to help you grow your business through referrals. I've got a background in healthcare, spent a lot of time in human capital management and been admin technology. I've been licensed in Louisiana and Mississippi as a broker and work on the broker and financial side as well. But I came to PeopleKeep in September of last year and excited to talk about HRAs with you today. So a little bit about PeopleKeep. Our passion really is to help organizations provide modern, flexible benefits that can be managed in minutes. We do that with simple, intuitive software and administration to help clients manage their benefits, stay compliant, and control spend. We work with companies of all sizes across the United States and all industries. We partner with anyone who has clients that either don't have benefits in place right now, have has a high group renewal, which we're starting to see a whole lot more these days. Anyone that needs a tax advantage business expense, and businesses that just want to do right by their employees. So today we'll start with just a basic introduction of HRAs, how it works, where it fits, different types, and we'll give some case study examples. We'll talk about some trends as well that we're seeing in the marketplace this year. Also discuss the opportunity that this provides you as individual brokers to help grow your business. And then we'll finish up briefly with a review of our partner program as well. So first, we'll start out with what options are available today for your clients and business owners to offer. You have the traditional group plan, which could be good, but may not actually meet the needs of employers and their employees and how they utilize their healthcare. You could offer an HRA, which is a reimbursement arrangement funded by the employer to help pay for employee medical coverage that they purchase in their local marketplace, which would be through you, the individual brokers. It's an effective alternative to the traditional way of providing health insurance to employees. It's tax-free business expense for your clients, free of income tax to the employees. You can reimburse health expenses manually as a third option, giving your employees money to buy health insurance on their own as a stipend, which works in some cases, but you're going to pay payroll taxes and your employees will pay income tax on it as well. And then, of course, you could also do nothing, which wouldn't change anything that's going on. All right. Quickly look at the transition from a defined benefit to a defined contribution. It's something that you want to help keep the business owner. It's a mind shift. A lot of people don't have anything in place or their own group insurance, but it's very similar to what we have seen in the past with pension plans. More of a defined benefit plan. We don't see them much anymore, except with larger insurance companies, because the market shifted over to 401ks, which is more of a defined contribution plan. This type of plan is going to give your clients, their employees, more control over their choices as well. All right, so a little bit about HRAs. HRAs started back in 2016. The Congress enacted the 21st Century Cures Act, which permitted an eligible employer that doesn't offer group health plans to provide tax-free reimbursements of qualified expenses to companies under 50 employees. A couple of years later, the individual coverage HRA was put in place by an executive order, and the ICHRA was created. A couple of key points to remember: HRAs are employer-sponsored plans. They're tax deductible to the employer. They're tax-free to the employee. And the employees are going to be reimbursed for qualified healthcare expenses up to a certain amount each month. All right, so how do they work? It's really just 4 steps. The employer is going to set a defined contribution and provide pre-tax funds that employees can use to help purchase individual health insurance. They can define that contribution to cover premiums, out-of-pocket expenses, or both. The employee is going to get an individual qualified health plan for them or their kids or their families, that whatever works best for their situation and budget. They will incur a health expense, such as a premium or doctor visit or prescription, and then request the reimbursement into the PeopleKey platform. At that point, our document review team is going to review the request and look at the IRS and HIPAA guidelines. The employees will be reimbursed for those expenses by the employer through a tax-free line on their paycheck. I will note that premiums only. You may have some clients that just want to reimburse premiums. We have a little bit of a different process for that. We just set up an auto reimbursement. So they will put their plan up into our software. And then what we'll do is we'll just set up on a monthly basis that reimbursement for premiums to go out on their paycheck, right? The only thing that they'll have to do is to attest that they still have the plan in our PeopleKey software. And they can do that by logging into the system, sending an email or a text. All right. So what's reimbursable? Anything that's outlined in IRS Publication 502 is very similar, exactly just like the HSA and FSA expenses. But there's 2 rules. You have to be it must be an eligible expense by the employee or their family or dependents, and it must take place within the plan year. You're probably familiar with the publication already, but basically anything medical, dental, and vision, individual medical expenses, copays, prescriptions, non-prescription drugs, mileage to and from eligible healthcare. Here's a sample of what it looks like in our system when we're entering those expenses. Once again, when everything is submitted into the system, our document review team is going to review the expenses, make sure everything's compliant, and then go out on a tax-free line on your paycheck to the employees after that's done. All right. Why should you offer one? It's simple. It's accessible. We see that traditional healthcare is very complex. There's unpredictable costs. There's strict requirements. The HRA gives your clients more control. It empowers the employees to personally choose an individual plan that works best for their families. As you know, in the individual marketplace, they can go out and choose a number of different types of plans and networks that's going to fit best for them. There are no rate hikes, and there's no participation or contribution minimum with a health reimbursement arrangement. And again, it's tax-free to the employee, tax deductible as a business expense to the employer. Okay. We'll pause here for any questions before we go into the different types of HRAs.
I do not see any questions yet in the chat. If you run into any questions, go ahead and put those in the question and answer or chat feature, and we will get to them during the breaks.
All right, perfect. All right, so we'll start out with the qualified small employer health reimbursement arrangement. There's 3, back up just a little bit. There's 3 that we offer in all of our HRAs. So it's the qualified small employer HRA, the individual coverage HRA, or the ICHRA, which I'm sure you've heard a lot about. We can also do a group coverage HRA as well, which is where you pair a health reimbursement arrangement for out-of-pocket expenses with the group plan. But we'll start off with the what we call our acronym ICHRA. This HRA is limited to businesses with less than 50 employees. They do have allowance caps on reimbursements that's set by the IRS. Right now for this year, it's $513 per month for individuals, $1,037 a month for employees that are married or have dependents. Okay. When you're talking to your clients, this is one of the first things that you want to ask is, do they have a reimbursement allowance in mind? If they wanted to give over those numbers, then we would need to move to another HRA. Okay. Also with the QSERA, you have to offer it to everyone in a class. All right. There's 11 different classes we see with the IRS. So for example, if you wanted to offer it to your full-time employees, you would have to offer it to all your full-time employees. All right. You can section that out and not offer anything to your part-time employees. That's completely legal and compliant. But you cannot offer an HRA to any contract or 1099 employees. The basic rule is for an employee to participate, they have to be a W-2 employee of the company. Okay. This one also has what's called employer-sponsored premium reimbursement. And what that does is allows for reimbursement of a spouse's group health premiums. One of the common things that we see with this qualified small employer HRA is often they have a desire to offer benefits, but they don't really want to manage group. They don't want to do the open enrollment, or it's too expensive. A lot of times they may not have a dedicated HR professional, and they just don't have the bandwidth to do that. Simple administration really makes this easy for them, taking on average about 20 to 30 minutes a month to disperse reimbursements through the software. Also, the QSERA can be effective immediately within 1 day of the setup. I wanted to mention tax credits because this comes up a lot. So employees who receive premium tax credits can still participate in the QSERA, but the employee is going to have to reduce their subsidy amount by the amount of their QSERA allowance. And what we'll have to do in that situation, which doesn't come up very much, but it does, and it's good to know about, you have to offer an unaffordable benefit in order for them to take the tax credits. All right. And I'll give you a quick example. We're working with a restaurant chain in New Jersey. They've got 2 locations. They're about to open another one. They wanted to cover just their full-time employees. But they also wanted to give an additional allowance to their 3 managers. Okay. So when you talk about different allowances with the QSERA, you can give more allowances based on family status, up to 3 times as much. So if you had a single person who was getting $100 a month and you had a married person with kids, you could give them up to $300 without doing anything, right? But it has to be based on family status. So what we did with this client is we are going to help them offer an unaffordable benefit. Unaffordable is no more than 8.39% of the employee's monthly income. And if we do that, then if it's unaffordable, they can take the QSERA allowance and they can use their premium tax credits. Again, we don't see it a whole lot, but just good to know. If it comes up, you can give me a call and we can walk through it. Okay. Next is the individual coverage HRA. I've already went through that on tax credits, so I'll skip that. Okay. So you may know this as the ICHRA. It's been the talk of the town for the past 6 or 7 months. The ICHRA adoption rose 350% from last year, according to the data from Kaiser Family Foundation. A good portion of that was employees that were coming off of group insurance with double-digit renewals. Also, a lot of small businesses that only want to cover part of their employee population. With the ICHRA, there's no maximum allowance. You can give as much as you want to. This is going to give your client more variation in the allowance amounts. Very valuable for attracting hard to hire talent. We also see this for smaller employers that have higher wages or limited budgets or even diverse employee needs. They may find the ICHRA more flexible and cost effective as compared to group. If you have clients that aren't on a group, you can still offer an ICHRA to any client. There's nothing too small or too large. We do see a lot of cases where only just 1 to 3 employees are covered, and that's fine. It's legal. That's what the classes are about and where they come in. If you have a client that has more than 50 employees, they're an applicable large employer, and they have to use the ICHRA. There's ACA mandate rules that are in place for that. You can also offer an ICHRA with a group plan, which we see in some cases, but the employees are not going to have a choice between the two. All right. For example, you could have all of your population on group with a subset of Medicare employees on the ICHRA, or you could offer group to all your full-time employees and have the ICHRA for your part-time employees. We've seen some cases to where the owners are on group. There's 2 owners, they're on group, and the rest they put with an HRA. The only thing to remember is that you need 10 people to create a class in order to offer an ICHRA with the group plan. What's really important is from a timing perspective, the ICHRA can't take effect until 30 days. Okay. So if you have a client that's interested and the ICHRA is going to be a good fit, we need to work back from that effective date, especially if they're coming off group and their renewal is, say, 6/1. We would need to have it in place by 5/1. That is just the way that the ICHRA operates. So to give an example, if you had somebody that started the ICHRA on 5/1, you as the individual broker could go ahead and get them already set in their plans and get their premiums and all that. But they wouldn't be able to be eligible for those plans until the 1st of next month, and the employer couldn't reimburse them until after 30 days. Okay. Any questions on that? Anything coming in,
I
Tammy?
don't see any questions.
Okay.
And you may be bringing this up shortly, but I think some of it is overwhelming for the agents who aren't aware of it. But
Yes,
the fact that you're there, you and your company are there every step of the way to help them with their clients.
absolutely. Absolutely. Great point. And it is for a lot of people who are not well versed or who haven't gone through a case, it can be a little overwhelming, and that's what we're here for. I'll give you another example. We'll talk about tax credits here. With the ICHRA, the employees can't collect premium tax credits and participate in the ICHRA. All right. But we do see some cases to where the rules are, if the ICHRA allowance is considered unaffordable, then they can waive the health reimbursement arrangements and stay on the premium tax credits. That is something we really don't see a lot. A lot of times what we do see is if the employer would actually just raise their allowance to make it similar to what their marketplace plan is in order to bypass that. But those are the rules. And again, any cases on this, we'll go through them one by one because I know it could get a little overwhelming because it's a lot of information. Okay. ICHRA classes, right? We talked about those. You can set different allowance amounts for different classes, and even within those classes. So there's 11 IRS classes. Mostly what we see is full-time, part-time, hourly, salaried, seasonal, and age bands and number of dependents. We also see a lot of geographical by state, right? If you have an employee that's out of state, they have a higher cost of living, then you can give them more allowance and it's completely compliant. Within the ICHRA, without creating classes, you can set allowance amounts based on age and family status. So you actually could give up to 3 times as much to an older employee versus a younger employee. And you can also do the same with number of tenants. You can offer more to employees that have more dependents or married versus a single employee. Again, we will help in the design of that benefit and walk through each case. One of the things that we have to focus on from a compliance perspective is when you're setting up those classes, need to make sure that the class offering is compliant. And if you're over 50, it has to be affordable. Usually that's going to be based, as I mentioned earlier, 8.39% of their monthly income. We usually base it on the lowest cost silver plan in their state marketplace as well, right? But again, we'll take care of all those calculations and more through best practices with our ICHRA compliance team. The only thing we would need from you is a census, and I'll attach that in the follow-up. Just have them fill out your basic information on their employees. We'll take that information and we'll design the affordability as well. All right. I'll go through this quickly. If you have any clients that are on group, we've seen a really large trend with ICHRA replacing group insurance, especially for the larger employers. And really the ICHRA was actually designed to fulfill the large employer mandate. But we do see it's a really flexible and valid option for any of your clients that are on group plans, especially if they have really high renewals. Instead of paying those rate increases, the employers have the opportunity to spend those dollars better. There's a lot of groups that struggle with participation, unable to meet minimum requirements. That doesn't matter with the ICHRA. There's no penalty, there's no participation requirements, there's no maximum reimbursement amounts, and really no risk. And again, it does satisfy those mandates. All right, I'll take some time just to go through a few examples since the ICHRA is so flexible. I'll give you 3 or 4. So we'll start first with a tech startup that we worked with based in Georgia. They had 8 people in the company, tough job market. The owner wanted to provide some competitive benefits just to the developer and the CFO. So with the ICHRA, we used the ICHRA classes to design the benefit. We gave salaried employees more than part-time employees in a class. The developer actually lived in California, so we gave him a large allowance because healthcare is more expensive there than it is in Georgia. So allowance caps and classification statuses allow a lot of different options for the ICHRA. Another example is a litigation firm we work with. 4 partners, all highly paid. They wanted to cover 100% of all their marketplace plans. It was a good plan they had in place. There's no caps on reimbursements and easy to set that up. And there was 4 different allowances that we were able to do, but that covered them at 100%. I'll give you a larger employer as well. This was a manufacturing company in Ohio, 68 employees. They had a really high 34% group renewal, and it was more affordable to them to go to the ICHRA. They had employees in different states. They had hourly, salaried. They wanted to offer different allowances for hourly and salaried employees with the option to give more allowances for their workers that were in California. So we put that all together with our ICHRA team and tool, showed what base allowances needed to be from a compliance perspective for each class. They ended up saving $3,000 a month, which basically negated their group renewal, and they went to an ICHRA. Okay. And one more, I mentioned it early, this United group that we worked with, they had another high increase, 40 employees. 15 were actually not on the group plan using premium tax credits. So we offered the ICHRA that covered 100% of the employees that had premium tax credits. So it made it affordable, and the employee didn't have to use the premium tax credits anymore. Okay. And then lastly, I'll walk through the group covered HRA. We're starting to see this a little bit more as well. It's also known as an integrated HRA, but it's a health benefit that's specifically designed for employers that already have a group health plan in place. A lot of times it's a high deductible plan, but it doesn't have to be. So what we do is we put an HRA on top of that. And the HRA is used to supplement their group policy for out-of-pocket medical expenses that the group plan doesn't fully cover. Deductible, copays, coinsurance, et cetera. Gives your clients greater control over healthcare benefit cost as well. Just a quick example, we work with a nonprofit, Helping Hands, double-digit increase. They decided to give an additional allowance to offset the high deductible plan and copays. And with this, as with most HRAs, you can allow different allowance classifications. In this case, they had different reimbursement amounts for hourly, salary, part-time, and full-time. It helped them forecast their year-over-year benefit spend while continuing to attract and retain talent. Okay. One more thing to note, one of the questions we get a lot is if the employees don't use all of their monthly allowance, what happens? If they don't use it, then any unused amount will roll over into the end of the year. So I'll give you an example. Say you have an employee that has a $300 a month reimbursement. Well, let's make it $500. They have $500 a month reimbursement and they have a $300 a month premium. That $200 a month is going to roll over month to month, and then they can build that up or they can actually use those for out-of-pocket expenses. I had a case to where actually it was my boss. He banked his rollovers and got an MRI done in November. Okay. So that is something that you can do as well. Another important note is that most of our employers will just set up a separate account that they use, just a savings account. An HRA does not require a separate account like a FSA or HSA, or like an HSA. But the money is always going to stay with the employer. Okay. If it's at the end of the year and they have allowance amounts that haven't been reimbursed, it doesn't go to the employee. It stays with the company. All right. That's a good point that we run into quite a bit. All right. I'll just go over this real quickly. This will be good for a recap. Just a quick snapshot of what we covered side by side on which ones that it is. Remember that the QSARA can only be offered for under 50 employees groups. You can offer the same allowance amounts, but you can use different allowances based on family status. The ICHRA can use anywhere. It's the most flexible HRA out there. You want to cover a subset of employees. You want to remain client. Solid alternative to group insurance. You can use it with groups of all sizes. If it's 50 plus, you have to use it, and you have the 11 eligible classes and no allowance caps. And then finally, the group coverage HRA, again, that's all sizes. You have to have a group plan in place. And then we have the classes available and no allowance caps there as well. All right. Let me take this time to go through a quick demonstration. And Tammy, if you can help me see, am I sharing the right screen?
Yes, I am seeing the platform.
All right. So this is what our platform looks like. You're going to have a dashboard from whoever the administrator is, and also as personal. But this is an example of how we would design a benefit. Okay. You have the benefit start date. You have the notification date. Again, for the ICHRA, the ICHRA plan is going to start when the notifications go out to the employees. We'll have a customer success person that will help your employers when we onboard to help design the benefit, help get everybody loaded in the system. It's really not anything that they need to do. And then we'll design the benefit and get those notifications out. So for example, this employer had 2 classes. They had full-time And you can see here in the monthly allowance section, so they were able to give more to single with dependents, married, and married with dependents. All right, that's something you can always do with the ICHRA. Another one is the part-time, to where they just said, I'm just going to give $400 to all our part-timers. You could do different allowances, but they chose not to. You'll see the run out period down here. At the end of every calendar year, a run out is going to allow the employer to set a time limit to when the employees will get their reimbursement in. All right. And if it's set, could be set for 30, 60, or 90 days. This one, they set it for 60. And what that means is if they don't get their receipts in by then they don't get reimbursed. Okay. We'll look at the same thing from a personal perspective for the employee. Again, they'll have their dashboard. They'll see what their balance is. They can see what their benefit usage over time. I mentioned the attestation. This is where the employee, if it's for premiums only and we're just setting up that automatic reimbursement, they would just log in here again or email text and say, yes, I have my plan. And then they can see their benefit summary when it runs from January to December. They're full-time, single. They're getting premium plus out-of-pocket expenses with a $700 monthly allowance. Okay. I will note this too. This is a good thing for people who are working in different states, or just you have clients that are far away. We can put a link, if you have a personal link as an individual broker through, Health Sherpa or wherever it is, whatever your link is, we can put this link right in here. So when the employees get their notification, this link will say, go to Tammy's website and put in the information. All right. You can also do that on phone, but that's just something that I wanted to show you that we could do. Down at the bottom, they can look at all their reimbursements. They can download this to a CSV. You can see here's one that is in review. Review generally doesn't take more than 10 to 15 days. And then you can see your transaction history. Let me go back to the company real quickly. When you get onboarded, we'll help you get all your employees in there here. We'll design the benefit. We'll put that benefit out, and these are the notifications. Okay. Those notifications will go out. You can see in this one, these opted out. Some others on the other page opted in. It'll show your attestation status as well. And then if there's any action items that you need to take. All the legal documents will always also be in the software, what your plan is, how it's set up. And then we can go here again if you have anything action that needs to take place right away. It looks like this person's all caught up. Okay. All right, let's go back and talk about ownership. This is something that's really important. Sometimes we see that owners do want to participate, and here's the rules around that. If you have a C corporation owner, then they can participate in the HRA because they're already a legal entity that's separate from the owners, so they'll qualify. S corporation owners generally can't participate, and this is because they're already set up. They can write off their benefits pre-tax as filing with an S corp. Of course, the IRS does not allow you to double dip. For sole proprietors and partnerships, this would include LLCs. If they have a spouse that's a W-2 employee at the business, then they can participate as an owner as a dependent on the spousal plan. And then if they don't qualify, of course, they can still offer the HRA to employees. One of the things that we see when owners don't qualify, we've seen some that go to a group plan, but a group plan for 2 people is pretty expensive. What they would do is just set up a reimbursement healthcare stipend. right? So they're still getting reimbursed if they want to, but it is taxable. So we'll handle that again as part of our process. We'll talk through the owners. We also see a lot of owners that they didn't want to participate in HRA. They just want to offer something for their employees. Okay, I'll mention this real quickly. I mentioned the healthcare stipend. Sometimes we do see where an employer wants to put a health reimbursement arrangement with a healthcare stipend. For example, we worked with a group not too long ago that they had 20 employees. They wanted to give an extra amount to their family. To their managers. They wanted to give extra amount to their 5 managers, but they were on a QSERA and there was really no way to define a class with that. They wanted to use the QSERA because they could offer an unaffordable benefit and still use the premium tax credit. So what we did in this situation is we offered those 5 managers, we offered a healthcare stipend to give them more allowance, and we're able to still stay compliant. All right. You could have owners that could use this as well. But just a note that it's out there. Again, if we have a client that's interested, and I can walk them through what would be the best scenario for them. All right, pricing. Our base pricing is $35 a month. That's a one-time base administration fee. That's for everything that we do on the background, on the back end. And then we'll charge $18 per employee per month who participate in the plan. All right. Important note, we don't charge everybody, only those who participate. Normally, there's a $150 setup fee. We waive that for all of our partners who refer clients into us. Another important note is that we do have a 3-seat minimum, which does include an administrative seat. And I mentioned it before, we have a lot of clients, and especially clients that are in with churches. So, they may have 10 employees, but they just want to cover their minister, and they're fine paying the $89 a month people keep for that. Okay. We do have some discounts as well. We have annual pricing, which cuts out about 10%. They could pay up front annually. People Keep does a month-to-month contract. So if for any reason they would want to cancel, before the end of the year, then they would get that money back. Pricing is different for applicable large employers because there's a lot more that goes into it, especially compliancy. The $150 fee is waived, but we have a base fee of $200 for administration and $30 per employee per month fee for those who participate. Again. All right, so as we wrap this up, just some points to remember when you're talking with your clients. The business is in charge of the HRA. They're going to determine how much is contributed to the HRA. We have tools to help with that if they need it. Our customer success team is going to help the client design the benefit as part of the onboarding process. Unused HRA money is always going to stay with the company. It doesn't roll over. HRAs can reimburse anything in our IRS publication 502 for individuals, spouses, families. It's important to know what their needs are, speak their language, and get us involved here at People Keep to walk you through it. If you do have a client that's interested, give me a call. We'll talk about it. To sign up your client, we can schedule a sign-up call with them, walk them through the process. Once the HRA is in place, I mentioned before, we let you all do the work. We don't use an in-house brokerage firms. One of the main differences you'll see with other companies out there, we give all of our broker partners the option to write individual policies for each case. Sometimes we need help with other clients that are coming off group, and they need somebody to write individual policies as well. Okay. And of course, you always have the opportunity to expand your ancillary sales in that as well. Sometimes we have CPAs. We have a lot of CPAs in our partner program. They're looking for a broker. We can connect you by state or however that would work out. And then if you if you want to get connected with a referral partner, you can give me a call. I'll work up to set up an introduction. I can search. I have a database I can search in by city, state, if you'd like as well. Okay. Let's talk about the program. Okay. So we do have a referral program on top of writing the plans yourself. For each client referred that becomes a customer, you get a referral fee. All right. We have the option to do a one-time payment. As you can see on the left, it's based on the number of seats. So if we have a 5-life group, and you'd get a $750 check. You can also do what we call an annuity. So you can go in and we'll pay you on a monthly basis for as long as the client is in place. And that's 10% of our monthly recurring revenue. Okay. And again, no action really required on your part, but couple things that you want to look at. Referring a client. Yeah. So a couple of ways to refer a client. You can call me, you can email me, or there's a link that you'll have that's on our website as well. You just need the client's name, email, how many employees they have. And if you want to write a note, that's always going to come directly to me. I'll always give any of my referral partners a call first before I talk to them. Sometimes we get referrals and they say, hey, just call them. So I'll do that as well. But I always want to check with you and get some background information before I talk with the client. Easy process though. All right, here's some information that we said, some quotes from some of our quoters, from some of our customers. Just want to end on a couple of thoughts. Current partners, again, work in a lot of different areas: benefits, insurance, financial companies, CPAs, franchises. But anybody can be a partner. Where the HRA fits, mostly what we see is clients that don't have insurance in place. It's in place or it's too high. Anybody that just needs a business expense, or a lot of times we see employers who just want to offer something to take care of their employees. What you get with People Keep: easy process, impeccable service, great benefit for the employer and the employee, and another way for you to serve your clients. And I think that's all I have, Tammy, if there's no other questions.
All right, I do have a couple of questions looking back at, I think there was a slide where we were talking about a church. So 100% went to the pastor, and then they had a couple of part-time employees that were on spousal benefits. So do you mind going back and just talking about how that can be reimbursed if they're using their spouse's health coverage, health group coverage?
Yes. So the spousal reimbursement for group coverage is only available with the qualified small employer HRA. And what we would do is we would take the group health premium and figure out the spouse's amount in that. Normally we just cut it in half. And then we'll just have to have a copy of the group plan and what their premiums are. And then we can reimburse that through the employee spouse reimbursement program.
Fantastic. All right, I think that was the last question. So thank you so much, Jay, for your time today. Everybody who's on, you can reach out to Jay, you can reach out to me, and I can connect you with him to answer any questions you may have or for the referrals. And thank you again, everyone, for participating, and have a wonderful day. Thank you again.
Thanks, everybody. Thank you, Tammy. I appreciate the opportunity.
Absolutely. Have a good one.
All right, you too.